Let's talk right now more about Evergrande and how it might impact the market action today, as it's been doing all through the course of the week. Joining us right now is Sarah Malik. She is Chief Investment Officer for Nuveen's $420 billion global equity division. And Sarah, this has kind of been the story of the week, even though it's been quietly out there for quite a long time. Things seem to be coming to a little bit of a head this week, and that does have markets concerned. How big of an impact do you think this would have on U.S. markets, if any?
Now, there's been two main events this week. One is Evergrande, and the second is the FOMC meeting. When it comes to Evergrande, this is about the Chinese government trying to deal with some of these bubbles that we're seeing in property markets and in credit markets. The government does have a large current account surplus, which they can use eventually to provide a bailout or a backstop to Evergrande. We see this as more of a property issue in China. Longer term, China's focus appears to be on social issues. We do think that the growth rates that you've seen in China are going to moderate going forward. And in 2022, that's the adjustment that the markets are going to have to make. Our view on China is you need to be hesitant there. If you're going to be looking for value in China, you need to look for quality companies, obviously with strong balance sheets. But for right now, this volatility still needs to play through. Now, the second has been tapering, which the FOMC came out yesterday and talked about finally starting tapering probably later this year. And equity and fixed income markets really didn't blink when they saw it. And this is because the Fed is only going to start tapering now that economic growth is strong enough to handle it. They've been taking baby steps towards tapering, communicating it well. Now, interesting, though, they're very divided on when to increase interest rates. They're viewing maybe 3 to 4 hikes by the end of 2023. Our view is they may be being optimistic here. Rate increases could get pushed out. And that, again, would be a positive for the markets for the long term.
Why do you think they're being optimistic? You think there's more rough sledding ahead, either in the markets or in the economy?
When you look at 2022 growth rates, we know that we're past the peak, and growth should be somewhat moderate. We see earnings growth maybe in the high single digits, which is quite strong. It'll be driven by the consumer and manufacturing data. But as that growth rate kind of moderates over time, the Fed may pull back on increasing interest rates. If you look at the bond markets, the yield curve is starting to flatten. The 10-year really didn't react too strongly to the FOMC meeting yesterday. The bond market's telling us that maybe they don't believe in such strong growth that'll lead to these multiple interest rate hikes going forward.
You know, the Fed has two official mandates. The first and most important is inflation. Secondarily, and one that's becoming more increasingly important, is full employment. But the third mandate that maybe doesn't get acknowledged quite as obviously is the markets. How much of a mandate is that? Do you think the Fed will ever be able to pull back if it looks like it creates just turmoil in the markets, even if it's not extreme turmoil, even if it's just a pullback? I mean, the pullbacks we've been talking about this week, we're still 3% or a little over 3% from the all-time high for the three major averages.
When you look at tapering historically, if it's done correctly with strong economic growth, it can cause a pullback, but it tends to be temporary. So I think the Fed most likely would be able to allow the markets to stomach that. When we look at inflation, obviously we've been seeing much higher numbers. Our view is that the spike in inflation is generally transitory, but there will be some permanence going forward. Inflation likely in the 2 to 3% range. And the question is, will the Fed view that as too hot or just right? So that'll be one of the keys going forward. And employment, as we know, has been coming in lower than expected going forward. The Fed did say one more strong employment number likely starts the tapering clock. We hope to see that going forward. But employment's been more in the mid to high single digits on average. And we'd like to see that get into the 7 figures going forward as Delta moves behind us, which we think that it is.
Shepard Smith here. Thanks for watching CNBC on YouTube.